What's going on, traders? This is Stephen Place with Precision Volume Alerts, and welcome to the Market Primer for February 6, 2022. It was a really nice week. There was a lot of volatility surrounding earnings events, especially around Google, Facebook, and what's the third one? Amazon, that led to a little shake and bake on Thursday and Friday. So last week I made the call basically saying if you were going to look at shorting levels, the obvious ones were not going to be the easy ones to take. And for the S&P, my case here was that the prior support potential resistance, along with this anchor VWAP from the swing highs right here, it was too easy. It was too close of a level to what a lot of people were going to be keying off of. And so I was expecting a little bit more, and we did get it. We did get that second push into, it's not a super clean level, but we've got this LVN right around here. We didn't get to that, and we had this LVN right around here. So we just kind of came back in, and then the whole thing gapped down. All right, so it maybe if Facebook had not come out with earnings, we may have just had one more push before the thing fell apart. But we saw a pretty gnarly gap down, and then the market was helped by a decent showing in some tech stocks like Snap and Amazon and things like that. And then we got a little bit more of a range trade over the past 2 days. So right now, I still think that the risk is to the upside. So think about the narrative stuff, right? When we go from what's known as an unknown unknown to a known unknown, that's when volatility picks up. Right. So back in November, the Fed comes out and says, hey, things are not looking transitory. And all of a sudden people are saying, wait, what's the Fed going to do? So now we have a known unknown, and then the whole market takes a hit. All right. And it has been a very strong sell-off. High to low, what is that? That's 12% for the S&P. It's been much more for the NASDAQ 100. That's a good lowercase c correction. Okay. So we saw acceleration to the downside. After the end of the year, we had the Santa Claus bounce or whatever it was called, and then we just get truck stick to the downside. And then what happens? We get tech earnings. Microsoft, Amazon, Google, Apple, Facebook, Tesla, which account for 35% of the market cap weighting in the S&P 500, all out of the way. We now have a pretty clear direction of what the Fed is going to do in the intermediate term. And we have a lot of folks hedged up right now. It's very difficult for the market to really roll over when everyone bought hedges back here. Okay, because you get a sell-off, right? And then people, traders and investors and fund managers will say, okay, it's time to take some hedges off. And that puts a floor in the markets. So within the context of our roadmap, what I would like to see if we were to have a good sized sell-off, okay? Because, saying, if we just go back and retest this level right here, well, throw the ruler out, that's going to be 2%, right? 1.5%. That's a lot of volatility overall. But I would like to see a test of the swing anchor VWAP right there. It's also an LVN right here. So if we were to see a decent selling event, I would like to see how price acts as we come into that level. Right, if we see just a teeny tiny bounce and then it gets truck stick to the downside, we're probably going to come back and test 434. Okay. At some point, we could probably retest these levels. It's just going to take a lot of those hedges to burn off first. Okay. And we just don't have enough information to really say, the retest is happening this week. It's like, probably not this week, probably not next week, but, we'll see how the technicals act and how, price responds into these sell-off levels. Now, if this level holds, or if we just continue to hold right here, right, then we've got the case to come back into 454.5. This LVN right here, it's going to be the start of a potential gap fill right here, and just a lot of folks, I think, will be offsides on that move, right? So if you're shorting, if you're a short-term trader and you shorted Thursday and Friday, right? Where are you going to put your highs? Or where are you going to put your stops? Your stops are probably going to be at Thursday, Friday highs. All right, so you'll probably see stop run into that. And then you'll have some people try and fade this gap fill. And then if that just gets accepted and we go sideways, where are you going to put your stop? somewhere around here, and then you get that second squeeze. And that's how you make the case for just a really nasty upside move that no one is expecting. Okay. I'm not making the case for all-time highs right now. We just don't have enough data. We can't look out that far. But we've seen time and time again instances in which way too many people are on the wrong foot with respect to positioning and hedging and anticipation of the next narratives, which are already pretty clear right now. And it becomes a difficult case to make for a continued rollover. Okay. So the NASDAQ, if we hop over to the Qs really quick, again, tech earnings are out of the way. High to low, so from these all-time highs to here, they're about 18% to the downside. So that's almost a capital C correction for the NASDAQ. This one did hold the levels, if you want to say supposed to in the market, they held the levels they were supposed to, right? Swing a VWAP from here, LVN right here, internal pivot support. And so we did find some levels and then a really nasty gap down. Did the level predict that? No. All right. I was actually expecting just a little bit more of a push to the upside. We didn't get it because of Facebook earnings. All right. So the fundamentals of an individual company moved the overall index and it changed the market structure. Okay. That's not particularly predictable. However, what we do have now is we have this area that continues to, it confuses isn't the right word. I just don't know how we're going to act into here. So the range is about 343 to 354. So if you look at the volume traded, there's not much here in terms of market participants. We don't know how the market's going to act. Yes, we did find some buyers right here. And in fact, we did at PVA, we did pick up calls in the Qs, sold half for 51% off of this level, right? So that's a pretty good gain. I think we sold it right here. So into this, just don't know. We don't have enough data. And when that happens, if you do really want to dive down, remember 50% of the weighting for the NASDAQ's in 6 stocks: Microsoft, Apple, Google, Amazon, Facebook, Tesla. So you can go into those and you can look at, for example, Microsoft and say, hey, Microsoft's holding this swing a VWAP from these recent lows right here. If it starts to roll back up, that's going to help the market. If it breaks down, that's going to hurt the market. And you can go into this decision tree, and it only takes about 6 names, and then you can throw in semiconductors right there, and you've got a pretty good thesis to go on from there. Okay, so we've got this level, and then we've got this level. All right. That's it, basically. Yes, there are some internal things to work with, but if you look at the uniformity of the volume distribution right here, that really doesn't give us much information. If we look at the volume distribution in this range, again, doesn't really give us a ton, right? We could make the case for, I don't know, if we were to throw on another line into the only place that has a proper LVN right in here. And that's just above this response and a little bit higher from this response. But again, it's just okay. We just don't have enough data for that. Okay. My bias is higher simply because we got tech earnings out of the way and we know the narrative with respect to the Fed. I'll be okay if we sell off, right? And I would do very well if we were to see a proper retest in the NASDAQ or even an overtake, because that's when calls get very fun to the upside when that snapback happens, because way too many people sell calls into that on the institutional side and calls get really stinking cheap. So I'd be okay with it. All right. If you got short, if you're a trader and you got short of the past 2 days, where are you gonna put your stops? Right here. Say, oh, Thursday, Friday high, that's when I'll get out. That on its own could lead to a liquidity event and a gap fill right here. You short that gap fill, where are you going to place your stops? Okay, maybe this high, or maybe you run it a little bit looser into these wicks right here. Into that stop run, I think, is a much more quality short setup, but it would just require a lot more energy. So again, we don't know yet, and that's okay. We do technically have a level that the market is right at right now, that if it holds, it's not unreasonable to expect at least a test of these swing AV WAPs right here, and maybe a gap fill, and maybe just a little bit higher into 369.70 into that LVN. Okay. We could also, if you wanted to make the case for it, and this is a very spurious case, you take the swing AV WAP from those, the January 24th lows, and that is where the market is holding exceptionally well. So, you could zoom this in a little bit more. and just look at how price has traded into this wick right here and these 3 wicks right here. And you could say, okay, that's a decent line in the sand to say, if we lose that level, then we're probably going to head lower and pick up some new levels and just generate some more data so we can get some better eyes on this. Finally, the Russell. And if you think that the NASDAQ looked low signal right here, kind of confusing, the Russell is even worse. Where, it was the scary one for me when we kicked off this series and started putting these up on YouTube. My biggest concern was the Russell for a breakdown, because we did see just a non-bounce. We didn't retake any key levels into that, and then we broke down. My thought was that this itty bitty level could hold, and it did on Monday, and then we saw a lower low just to take out that last round of stops, and then we see a bounce, but the bounce really is kind of anemic. It's not like the same magnitude that we saw for the NASDAQ or the S&P. All right, and if I'm reading this right, okay, and this is, I'm going to put a new line on here just because I'm seeing it now. This LVN right here is pretty close to these responses right here. So we can just keep that on there, and that's a good reference to work with. Now, if you want to be bullish, you've got to see these levels hold in the very, very near term. If you want to be bearish, you're probably in a good spot with the Russell. Again, just think about if you're short with any kind of leverage, where you're going to place your stops, and you're probably going to see stop runs more likely to the upside than to the downside right now. And we'll get to the hedging instruments in just a moment. You can also put a swing AVWAP against this swing high right here, and that's going to line up with the 20 EMA as well as that level we just pointed out. So we may get one more selling opportunity or shorting opportunity there. If the pullback's very shallow, you're probably going to see a push to 210. Okay. If that doesn't happen, if we continue to see acceptance and an establishment of a new range, and any attempt to get above 204, 205 gets sold, then yeah, you can make the case for a rollover. It's just a really hard case to make right now. If we look at the VIX, and this is one of the reasons why I'm a little bit more bullish than bearish right now, and it is because just 10 trading days ago, the spot VIX was at 36, and we're currently at 25. And even after the ugly event with Facebook earnings, we are not seeing massive demand for hedging right now. Why? Because if you bought hedges 10 days ago, you don't rebuy them. Odds are, and this is, I'm sure you can quantitatively test this, just look at where the spikes occur for spot VIX, and you're going to see that the average distance is about a month, is about one OPEX cycle, because the hedges have to get burnt off to reintroduce downside convexity exposure in equities. We don't have it right now. It's tough to see proper rollovers in the indices. Okay? Now, how can that change? Right? Ukraine, obviously. I think it's a psyop, but we'll see. If the Fed messaging has to drastically change because of inflation or new CPI numbers or things like that, where instead of X amount of hikes, it's now X plus 1 amount of hikes or X plus 2, right? Or if we just see a serious cascade in tech momentum. So for example, if Facebook, and I don't think it will, I think we're coming to some pretty quality levels, but if Facebook just gets completely trashed here, or if some bad news comes out of Apple and Apple just rolls over and gets truck sticked. If the breakout on Google on earnings all of a sudden starts to really fall out of bed and we start to roll over, right? Then you can make the case for a proper rollover in risk assets again. We're just not there. We don't have enough evidence to really make that case. The narratives that have been driving this market are now behind us, and we have a pretty good case to make that this is more of a bottoming process. Can we eventually retest the lows? Yes. Okay, is it going to happen next week? Probably not. Okay, so, timing matters, especially if you're picking up hedges, if you're buying options, calls and puts. You have to be pretty right straight on. So you can short the market and maybe you'll be break even 2 weeks later, but if you're buying puts, you won't be because of the time decay. So if you are looking at puts, if you are looking to short, if you are looking to get bared up, you just have to be very cognizant of the fact that everyone already got bared up and they're on the wrong foot. And so there are better quality setups to get bared up at better levels with better option prices in just a little bit of time. That's all I got for this week. If you have any other questions, feel free to reach out. Have a great day.